connected today to us in this very difficult timing when there's this total blackout throughout Ukraine. We highly appreciate your interest and your dedication to spend these 2 hours with us today. I'm welcoming you, and let's have a very productive and talk today during this webinar, which is dedicated to integrated climate risks into investment decision making as a way of ensuring climate resilient portfolios. We are talking about financial system and sustainable development. These two notions are absolutely interconnected, as sustainable development brings into sustainable financing, which supports sustainable and inclusive growth and ESG incorporation in investment decision making. When we are talking about sustainable finance, we are talking about green taxonomy also, which is in a very simple lexicon, a standardized definition of investments or loans that qualify as sustainable. Why taxonomy nowadays is so important? Because it inspires confidence in investors, it prevents greenwashing, as well as it supports and facilitates cross-border investments. As major global economies look to transition to low carbon and sustainable, a major role has emerged for financial markets to promote and to support the massive capital flows and investments necessary to facilitate this change. But at the same time, we have now new challenges for our regulators. Why? Because they need to fulfill their roles of protecting investors and maintaining market stability. The top areas for regulators of today include building capacities in sustainable finance, monitoring, assessing, and analyzing ESG markets and risks. On the other hand, we also need to pay attention to build supervisory capabilities to fully embed sustainable finance into daily supervisory work and to our supervisory culture. About this and much more, we are going to talk today with our renowned and distinguished speakers, whom we have invited to share with us their knowledge and their know-how. So kindly please welcome our speakers, Friso de Jong from the EBRD, Christian Würfel and Vera Economou from the Raiffeisen Bank International, Austria, as well as Malka Buchurishvili from TBC Bank, Georgia. Let me pay a few attention, just give me a few minutes to explain how we are going to proceed today in terms of logistics and in terms of our agenda. First hour and a bit of more, we will spend listening to our presenters who will provide their presentations. In case you have any questions, especially when you have questions to our speakers, could you please put them in the chat box and I will be able to read them afterwards so that our speakers could provide the answers to your questions in the second half of our webinar. Also, at the end of our webinar, we will have some time to discuss the important issues in terms of investment decision making and sustainability, also energy sector challenges, climate risks challenges, and what can be very useful for you, our audience, so that we can discuss shortly. Maybe also, if you have any questions not connected with our today's presentations, but which are very critical and crucial, also please put them into the chat box. Again, in spite of the difficulties and all the atrocities what Ukraine is undergoing nowadays, I highly believe that what we are discussing today will put very productive seeds into our sustainable future, just to secure a good future for our children and grandchildren. Let's prepare ourselves for the post-war modernization of Ukraine, of all the industrial sectors of Ukraine. And let's be on alert when the opportunity pumps. Thank you again very much for your participation and for your presence here. Hoping that you will be very active today. And let's start with a small questionnaire. Could you please, may I ask our engineers to put the first question on the screen? Інженер, чи можна вивести? Дякую. So, you have here's a question. What is green transformation? And you have a multiple choice. Could you please provide your answers? We will see the results on screen. I also answered. Okay, did everybody vote? Can we have the answers on screen? Oh, very good. So, what is green transformation? Use of renewable energy sources or use of green areas for the sustainable future? The majority voted for use of green energy. To be very open, both answers are correct. So, let us start. And may I introduce our first speaker, who is Friso de Jong. Friso is principal and responsible for green financial systems at the European Bank for Reconstruction and Development. Friso has more than 15 years of experience in climate and carbon finance and green capital markets development. He coordinates EBRD's investment in sustainable bonds issued by banks. So Friso, the floor is yours. I'm pleased to welcome you, and I'm very happy that you will share with us your knowledge and your expertise. Thank you.
Thank you very much, Oksana. I trust you can hear me, and that you can see my screen that I just shared with you. Can you confirm that, please?
Yes, yes, Friso, I do confirm screen is visible. You are visible. So
okay.
Let's start.
Thank you very much. So yeah, thanks for the introduction as well. I can leave that part. So I work in EBRD in the climate strategy and delivery team. And before I dive into the green capital markets topic, I would also like to highlight EBRD's journey basically through time, which also gives you an idea as to how companies, how banks can approach this topic. It's something that we have been through, and obviously we would like to see that transformation that was alluded to in the introduction, that transition to happen much more quickly, obviously in view of the enormous challenges that we face. Back in the early 90s, just after the bank was established, we established an energy efficiency and climate change team as one of the first MDBs to do so. And that then led in 2006 to the bank's first green strategic initiative called the Sustainable Energy Initiative, at which time we basically started to track our green investments. And admittedly, at that time, based on an Excel spreadsheet. We evolved over time. We had subsequent iterations of that strategic energy initiative. We broadened the scope of these strategic initiatives as well over time to evolve into a sustainable resource initiative in 2013. And then from 2015 onwards, green economy transition. And you refer to green financial systems. I'm not myself responsible for green financial systems. We all carry that responsibility, but within the bank, we have established a dedicated team working towards greening financial systems more generally, and development of green capital markets fits very nicely within that subject. You can also see our green share of total investments evolving from 26% back in 2006 to as much as 46% in 2015 as part of the green economy transition approach. And we're now at the stage where over 50% of our investments are to qualify as green. And that is also something that we can discuss separately. I think other presenters will do so as well. It's obviously following EBRD's green terminology, which is, however, over time closely aligned with other MDBs, but also with the EU taxonomy, for example. So that is an important point to make. Back in the early days, it was very much our approach towards green, and obviously over time that has very much evolved to a common language that we now speak when we talk about green. So more than 50% of our investments by 2025. We achieved that target early last year. Now, 2020 was a particularly difficult year. Obviously, 2021 we achieved that target early. We're basically heading to a similar amount this year, despite the enormous difficulties as well in Ukraine, the war in Ukraine, that also obviously affects that very much, and very saddened to hear, in particular, the recent power outages that you're dealing with. A bit more on that later as well. To describe a bit of context, sustainable finance and the role of green capital markets, I use here specifically green bonds. I have further slides explaining what exactly, where we're at, basically. But I'm not just talking about green bonds. Green bonds, sustainability bonds, sustainability-linked bonds as well, generally referred to as GSS plus type of instruments or investments. The international context, we obviously just finished the COP27 in Egypt, but back in 2015, I think it was, in Paris, the parties agreed to a global temperature average limitation of 2 degrees Celsius, and ideally to below 1.5 degrees Celsius. The IPCC then also stressed the enormous financing needs required to achieve those targets. More recently, we're estimating those at about $6 to $7 trillion annually required globally over the next 15 years to finance a low carbon transition. So enormous amounts of financing required. But to put this into perspective, the global debt markets, the global fixed income markets, are worth over $100 trillions. Obviously, the challenge then is to find green assets to be able to finance the transition to green over time. But just to put that figure into perspective. Then the TCFD is an important driver, the Task Force for Climate-Related Financial Disclosures, that really has or makes companies committing to those objectives to also report on what they do in this area. I already touched upon the EU taxonomy. I understand other speakers will further elaborate on that. Very important for that common language I was talking about. The increasing focus on climate risks and their recognition also by rating agencies. We've seen that more recently in the US, municipal bond markets, where rating agencies are increasingly focusing on and looking at risks of climate disasters, flooding risk, for example. That is likely to have an impact over time. Also, the accelerated introduction of the relevant regulation and legislation. Again, here the EU is an important driver. The Carbon Border Adjustment Mechanism is an example, but also listing on stock exchanges that require their companies to report also on sustainability, on climate risks, on carbon footprints more generally. So that will then also define essentially the winners and the losers in years to come. Then on to the role of green bonds. Obviously, you have the ability when issuing a green bond to demonstrate your commitment, your ambition and transparency towards your business operations more generally. A critical role for redirecting capital towards sustainable and green investments, and an important ability to crowd in the private sector. Obviously, also EBRD is a relatively small bank. We need to mobilize the private sector to invest in green going forward. That's the only way to achieve the multi-trillions annually that are required. And it's an important instrument for increasing transparency in the financial sector. Greenwashing was already referred to. We need to be very careful in that respect. I've got some pointers on that later on as well. But also, more interestingly, for the opportunity it gives, it would attract a certain investor base that you may not currently have, simply because there are ESG investors that have a specific mandate to achieve certain targets in this area. So that is something that we see currently focusing on Europe, but hopefully also outside of Europe very soon. This is an overview of the development of the green bond market. And again, I talk about green bonds, but the title of this slide is also GSS Plus, so green, social, sustainability. And then the plus is essentially for other types of instruments, such as sustainability-linked bonds as well. This graph is provided, or the source is the Climate Bonds Initiative, a not-for-profit organization that you may be familiar with, an important resource of information as well on this market specifically. The graph starts in 2015, which is when really this market kicked off. However, it really started back in 2007 when EIB, the European Investment Bank, was the first to issue a climate bond, followed by others like the World Bank, but also EBRD in 2010. And EBRD was able to issue a first green bond in 2010 on the back of those strategic initiatives I was talking about earlier as well. And then the Excel spreadsheets that then subsequently moved into proper bank reporting, integrating into the bank's tracking systems, etc. So that is a really important first step to be able on the road towards issuing green bonds in future. A few highlights here. Obviously, the ability of this area, this segment, to mobilize financing and private sector financing at scale. You can see here in 2021, last year, the $1 trillion mark was breached for the first time. So we're now looking at multi-trillions of investments in green, in GSS plus type instruments. And again, linking that to the 100 trillion plus of green debt or bonds more generally outstanding in the market shows that from a percentage below 1 a couple of years ago, we're now moving up to 3, 4, 5% of that market over time. And this is expected to continue its exponential growth, basically. Social bonds, important to highlight here. It's basically the turquoise color. 2020, obviously a big rise because of COVID and the COVID-19 pandemic. Social, I'm not particularly covering social, but we also because as EBRD we haven't financed a single social bond. We also don't really see those just yet in our region. Maybe one or two exceptions, but this is likely to come as well over time. Sustainability bonds, so a combination of green and social assets. We do see that. I have a next slide on that showing how we are now involved in those transactions, well, only from this year. You can see also the growth figures here. And then important to highlight, also based on the discussion that we're having today, municipalities. And I refer to the US municipal bond market. This is hardly, especially within the European context and especially in the EBRD region, this is not yet materializing. It's not yet kicking off. And it is obviously important in view of building back better post-pandemic, but also post-war when we get to that point. So just to highlight the specific challenges and the specific instruments that we probably need to develop to make that market flourish as well over time, as it does in the US. What is EBRD's role? I mentioned we issue green bonds. We do so since 2010, and we have since issued over 120 green bonds. And when I talk about green bonds, again, there's different colors of green bonds. These include climate transition bonds. They include also climate resilience bonds. So a whole range of green bonds that feature here for a total amount of 8 billion euros. So that means that EBRD finances projects that meet the requirements of that particular issuance, and are hence also reported to investors in EBRD bonds accordingly on the back of our strategic initiatives, now the green economy transition approach. We invest directly in green bonds. I have a separate slide on that. But important here to highlight as well that in that particular slide, I don't include funds. but funds have a very important and increasingly important role to play. And a few words on that later on as well, because they will be particularly relevant also when we talk about the demand side for these types of instruments. So we did invest back in 2018 in the Amundi Green Bond Fund, focusing on green bond issuances by banks, basically financial institutions. We have been a member of the executive committee of the Green Bond Principles, the International Capital Market Association Green Bond Principles. So we're very much involved and engaged in setting best practices and standards at the EU level, when it concerns the EU Green Bond Standard, for example, the EU taxonomy, but also specifically green bond standards, including those that are developed by the CBI, the Climate Bonds Initiative, that has its own dedicated taxonomy on the basis of which it basically provides a certification on their green products. And lastly, and I will finish this presentation with a slide on our specific and dedicated support facility that we have to also help issuers come to market. And before I forget, we are actually now finalizing one such support program to a bank in Armenia, which then hopefully allows that particular bank to establish its sustainable finance framework and subsequently issue also in on the green capital markets. EBRD investments to date, we started investing in green bonds in 2017. It was clearly a very slow start. I just showed the slide showing global market developments and trends. You can see the exponential growth here as well, but we're trailing behind a little bit. And I'm obviously talking about the EBRD region here. So the 2017 and 2018 transactions were basically from the same issuer in one of the Baltic countries. It really kicked off in 2021. So last year, the different color schemes here, blue is financial institutions, yellow is sustainable infrastructure group, that is a group within EBRD, and then the industry, commerce, and agribusiness group. So those are the three pillars basically that we distinguish within EBRD. And you can see how, especially the sustainable infrastructure group, grew quite significantly last year, mainly on the back of the emergence of sustainability-linked bond products in our countries of operations. Not to say that green bonds remain the most important part, 73%, but you can see how other instruments really gain importance as well. 6% here in the pie chart on the right is basically for sustainability bond products that we only started investing in through banks as of this year. So this is 3 separate transactions by 2 banks in European countries. So these are sustainability bonds combining the financing of green and social assets. And when I talk about social assets, just to give an example in one particular case as well, it's for example about the financing of SMEs in underserved regions, and hence it fits really nicely with other transition qualities that EBRD also seeks to promote apart from green. I wanted to say a few words on SLBs. So this is a slide covering a couple of case studies. I would draw your attention in particular to the second column, which is about Ukrenagro, which seems obviously fitting in this very difficult environment that you find yourselves in. The first SLB that we financed was, however, with PPC, a utility provider in Greece, where we sought to, already issuers sought to increase capex to finance or to decarbonize the operations of the grid, basically. So adding more renewable energy, allowing the addition of more renewable energy to the grid over time. You can also see the enormous interest in these instruments. What I forgot to mention on the previous slide is that we have also invested in a green bond by Georgian Railways. That subscription alone was oversubscribed by 8 times. Now that was pre-war, so that's an important qualifier. However, it does show the interest that investors, institutional investors, show in this emerging market segment. So a few words on Ukrenergo. This was an SLB, a sustainability-linked bond that we financed and that the company issued pre-war in 2020 or 2021, I believe it was. 825 million, also really seeking to increase the share of renewables to the grid. So there are dedicated KPIs, because the beauty of an SLB is basically it allows the financing of general corporate purposes. So it's not, unlike green bonds, a specific use of proceeds instrument. However, obviously the idea is that the issuer achieves certain predetermined and agreed key performance indicators. And if it does, it either structures a penalty. Well, if it meets the KPIs, it's obviously an uplift for the benefit of the issuer, or the other way around in case it doesn't meet those specific targets. This was followed, I just stick with Ukrenergo for the time being, this was followed by an emergency package as well earlier this year. And only today it was further complemented with an additional 372 million euros, in part guaranteed by the US. And also the 72 million euros is basically funded by the Dutch government. It's basically in the form of grants. So important to highlight that we basically earlier this year reconfigured an initial loan to Ukrenergo that goes back to 2019 as emergency support, essentially to obviously try to keep the lights on during winter. And again today, I will put that in the chat later on, an emergency response package as well, helping Ukrenergo to meet its financial obligations. It's also a good example to highlight that green bonds or green capital markets more generally are not the solution to all your problems. But as Oksana mentioned in the introduction, it is important to start thinking about these issues now, to be prepared as and when the time is right to tap these markets. Clearly, in these instances, and also in the original SLB issued by Ukrenergo pre-war, a guarantee mechanism was required to make this, it essentially served as credit enhancement, to make this structure work. And that's also important to highlight for municipalities and municipal bonds more generally. Huge potential, but likely to need guarantee support, guarantee structures to give investors the confidence as well that they will, at the end of the day, get their money back. We're working on that. This was also financed or covered in part by a guarantee by EFSD. We're also working with the European Union on further support through EFSD, EFSD Plus, to be able to offer such credit enhancement or credit guarantee instruments on the back of also green bond or SLB issuances. Benefits and challenges of green bond issuances. I won't dwell too much on this slide. There's obvious advantages to issue green bonds, some of which I already touched upon. It's obviously about your credibility. It's about transparently showing to investors what their money is being used for. That may then have certain advantages in terms of pricing, but I guess more importantly at this stage, it's also about diversifying your investor base, but also for these bond products to maintain their value in the secondary market as well. I think that was proven during COVID, during the pandemic, where green bonds held their value better than ordinary or plain vanilla bonds. The pricing difference is and also shouldn't be the reason for you to issue a green bond. There's other reasons that I mentioned on an earlier slide why you may want to consider issuing in a green labeled bond format. Green assets. That is obviously the critical point. You need to have green assets. And that's also where SLBs are interesting, because they don't necessitate you having sufficient amount of green assets. It allows you to set specific targets that you can then meet, and that would then also allow you to cut the margin, for example. you can think about the carbon footprint of your operations, but you can also think about social key performance indicators as well. So especially where green assets are hard to come by, whether your business model doesn't really have that or isn't obvious to have specific green assets, renewable energy, for example, green buildings, sustainability-linked bonds would still allow you to basically access this market by having clear, transparent, and credible, ambitious key performance indicators for investors to also achieve their specific ESG mandates, for example. It's not easy. That's the main point of this slide as well. There's resource implications. It is going to cost additionally, but it has additional advantages there as well. It will basically put departments in your companies together that may not have previously been involved in these types of conversations. And that really has specific benefits over time as well, especially when talking about climate risks and being able to identify these risks and to integrate these risks into your performance appraisal and processes. Lastly, but not least, reputational risks, already briefly touched upon, also in the introduction. It is important to get it right from the very beginning. When we look at Ukraine, Georgia, Armenia, we have obviously investments in Ukraine and Georgia. In Georgia, there's currently 2. More recently, actually last month, a green project bond, a renewable energy project developer in Georgia that issued and that we also invested in together with IFC. But some companies, some banks, some countries don't get it right. And EBRD has in those cases also decided against investing in those issuances. Obviously, it's an evolving market. It's an evolving market space. Taxonomies are developing, but it is important to get it right the first time, as otherwise you may risk losing credibility even before your ability to tap these markets has sincerely started. So what does EBRD do to make sure that those high quality standards are being met? We look at the ICMA principles, the International Capital Markets Association Green Bond Principles, as a baseline, basically, as a starting point. These are important principles, 4 pillars mainly, one of which is obviously use of proceeds, and that's also where we have a slightly different approach. ICMA doesn't really set green use of proceeds criteria, but other taxonomies do. And as I mentioned earlier, the EBRD is very much aligned, especially within the EU, of course, with the EU taxonomy. Outside of the EU, we have slightly different targets, but they're all linked and very much tuned into the EU taxonomy requirements. We require the green bond framework to be externally reviewed before issuance, but we also want to see that green bond framework or sustainable finance framework, as well as the external review, typically in the form of a second-party opinion, to be published on the company's website in advance. Obviously, there's obvious benefits to that. You want to let your investor base know that you're issuing in a particular green format, but we don't see this all the time, and obviously we then can't invest in those issuances. We really need to see this market develop transparently. We need those documents, critical documents, to assess whether also the greenness of the issuance, we need to see that published well in advance of the issuance itself. We obviously have our own environmental social policy that we need to, or we want to see compliance with and adhere to. Use of proceeds, I already spoke about. We have our own Green Economy Transition Handbook, but again, very much tuned into and aligned with the EU taxonomy requirements. We can also rely in particular instances on the methodologies or the taxonomies that the CBI has in place and their specific certification, so the Climate Bonds Initiative certification. And we can see that as a trend as well, that more and more clients and issuers use the Climate Bonds Initiative certification scheme as a more premium scheme compared to the ICMA principles. But they incorporate the ICMA principles. They're not mutually exclusive, basically, important to mention. We also expect annual reporting, publicly available on the website, company's website, because obviously for transparency, credibility, we need to understand what the money is actually being used for. Typically, you see that there's a commitment to allocate the funding within 2 years' time, at the very latest, 18 months, 24 months. And obviously, we want to see that reflected in a company's annual report on this topic. I spoke about the environmental social policy earlier. We do have a bilateral framework agreement that we separately agree, a side letter that we agree with the issuer in advance, highlighting what our specific additional requirements are. And that is something very particular to EBRD and the mandate that we have. I'm going to my last slide. If it loads, it's thinking about doing it. That doesn't seem to work. Can you still see this slide, or no? I think not. Let me.
No, I just see a general Zoom page.
Yes.
Yeah.
Let me. Apologies for that.
We're back. We have a lot of questions already to you.
Okay. Let me a few minutes on this final slide. This is basically EBRD offering on technical assistance and support. Most of the work that we do is basically step one. We work directly with issuers, clients that are thinking about issuing green bonds, and we make sure that they develop their frameworks in line with the requirements that we have. But we also have an ability to, I mentioned the Armenian case, where we work with a bank to help them establish their sustainable finance framework, but also to help them understand what the gaps are, to what extent they're ready to access green capital markets in future. Obviously, step 5, it's about investment. EBRD wants to invest in these issuances, and we can also play a role in helping clients to report diligently and credibly annually on their achievements over time. So I just wanted to conclude with this final slide. The challenges are enormous. We are there to support issuers, including in Ukraine, Georgia, and Armenia. It's a journey. I mentioned that in the beginning. It's a journey that takes time, and it's good to talk about these issues at an early stage. So thank you for the opportunity to allow me to elaborate on those.
Thank you very much, Friso. It was very, very full of plenty of information and very, very useful. And what I see, we have a lot of already questions, and the questions are to your presentation. So maybe I will be able to ask them quickly right now, just to finish your presentation, to make it full and complex. Sure. And but we have very little timing, because we need to give floor to other speakers. I will read the questions, and in case you need time to prepare, we will be able to return to these questions later. In case you have answers right now, please provide them. There are a few questions from Igor Olohov. Igor is always very active. He represents the company CMS Cameron McKenna. And the first question from Igor is about what sorts of yields do you expect that EBRD green bonds would bring these days when interest rates are rising?
The bonds issued by EBRD itself.
Yeah.
I will conveniently pass on that question. It's basically, not that I don't want to, but it's basically a question for Treasury counterparties. Okay. As I mentioned, I'm in the climate strategy and delivery team. There's clear separation and distinction between the bank's treasury operations on the one hand and the bank's business operations on the other. So it's not something that I can elaborate on in much detail, I'm afraid.
But logically would be in terms of basic rates are rising, so the interest rates also would be rising. So let's move to another question. Which jurisdictions in Central and Eastern Europe and Central Asia would likely be attractive for EBRD to invest into green bonds? Or which issuers would be interested to step up?
I would say any. I mean, it really depends on their development trajectory. What we currently see in countries like Mongolia and Kazakhstan, for example, it's really difficult to be able to have a sufficient asset pool, a qualifying asset pool of green assets. Those need to be developed, and EBRD is basically working on that ever since we started working with those clients. A good example is the credit lines, the green credit lines that we have with banks. Those credit lines basically lay or the foundation for these banks to recognize green assets, to report on those as well annually. And that is basically a first important step for banks, but similarly also companies, corporates more generally, to be able to access green capital markets. But I think that the main distinguishing feature that I would want to highlight based on this question is public versus private placements and the ability to mobilize additional investors. That's critically important for EBRD. If we were to, and we're seeing that as well, right, in Armenia, I mean, there are certain bilateral green bonds. We need to do better than that. We need to, ideally, we see public placements listed on the local stock exchanges, ideally. Not to say that we can't invest in private placements too, but only if we also have, that we can generate additional private sector interest in these issuances. That is really important. And so I don't want to highlight a specific country. I did mention the investments we already did in Georgia with Georgian Railways and this Georgian renewable energy company and Ukrenergo in Ukraine. And that was obviously in 2021 the first such SLB out of Ukraine. So it's a really, really nascent market still today.
Okay, thank you very much, because this reminds me, your answer reminds me of what I have heard from Kristalina Georgieva, the managing director at IMF, who said that we just need new policies to incentivize private investors to do more. And maybe one more question to you from Igor. Which areas of investment do you see? Maybe some typical or throughout any industry.
What we see in EU countries is a combination of real estate, renewable energy, and green buildings. And I think that's also important to highlight when we talk about building back better and the recovery of Ukraine post-war. There is, of course, an opportunity there. But again, also what the example of Ukrenergo shows, it's not going to be your green bonds are not a means to an end. Well, they are a means to an end. They're not a means or an objective in themselves, right? So just as a caveat, in non-EU countries, we see a focus currently on renewable energy developers that are able to also refinance existing portfolios of their of green projects, so they were able to obviously finance more expensively, and also because it includes the build and the implementation risk, to then offload that, refinance those loans essentially with green bond issuances on the back of those investments. And then in Georgia, I mentioned the railways. We see that also in other non-EU countries. Also in Morocco, we see a railway company that issued its first green bond. So we see that more generally, and only now emergence of social bond, interest in social bond, for now in focusing on Northern African countries, if that answers your question.
Okay, thank you very much. There is one more in the chat question, but it's a very technical one regarding Ukrenergo. Maybe you will be able to have a look after and just give your answer to Igor here in the chat. I have one more question from Louise, who is asking, how do social assets prioritize the green bond market for a sustainable investor base?
I'm not sure if I understand the question, but because social bonds are obviously, they don't have anything to do with green. However, the processes around issuing social bonds are very similar to issuing a green bond. The only difference being that you're talking about and financing social assets as opposed to green assets. So that's the main distinguishing feature, I would say. The combination of the two is what we would also want to promote and see is well, through sustainability bonds, right, where you have the ability as an issuer to also introduce some flexibility, that you're not only stuck with financing green, because that, as I said, is particularly challenging, but to have a wider spectrum of eligible use of proceeds criteria on the basis of which you can allocate your funding over time.
Thank you very much. Friso was very, very happy to see you and to receive as our guest here. And thank you very much for your presentation. Could you please stay with us if you have timing? Maybe there will be some questions to you, so you can answer them directly in the chat.
Sure.
And we are moving forward. I'm very pleased to introduce two next speakers, my former colleagues from Raiffeisen Bank International. Those who know me, I have spent more than 10 years as head of corporate banking at Raiffeisen Bank in Ukraine. So welcome, please, two ladies, Christine Würfel and Vera Economou. So Christine Würfel is a director group responsible for ESG and responsible banking at Raiffeisen Bank International. In her position, Christine is responsible for steering and reporting on the United Nations Environment Programme Finance Initiative Principles for Responsible Banking. Christine shares her experience and her know-how throughout the whole network of Raiffeisen Bank International, and she manages the strategic ESG stakeholder engagement. Vera Economou, her colleague, is responsible for ESG Group Competence Center at Raiffeisen Bank International and is leading ESG Group Competence Center. As well, Vera coordinates corporate ESG experts across network banks at Raiffeisen Bank International. She has the responsibility to manage green and social loan portfolios. Vera gained her international experience in Hong Kong as international business consultant and joined the EBRD in 2011. So please welcome our next speakers. We can start. Thank you.
Perfect. Thank you very much, Oksana. Thank you for the warm welcome and the possibility to speak, especially now that you have the interest in these challenging times. So first of all, yes, thank you very much. RBI, you know it already quite perfectly, the RBI group. Only for the audience, it's a cross-border banking group. We are in Austria headquartered and in 12 markets in the CEE region, and are dealing, of course, with EU and non-EU regulatory requirements in the financial services industry. So here, of course, the e-taxonomy is a pure European one, but of course it's spreading across the borders. So this is really much in focus. And we are now happy to share with you some insights how an international banking group is here trying to include sustainable finance in our businesses to be compliant with regulatory requirements, but also, of course, jumping to the train also from the market perspectives and also to contribute to a sustainable future. So with us, with Vera Economou and myself, you have two pillars of this journey. So myself, I'm here from the ESG strategy, governance, and the reporting, the transparency side, and Vera is then jumping into the business and what you heard already from the green bond issuance on our products and how we are really driving here the train towards a better or sustainable future and how we can contribute also on this. If we start now with the first slide, thank you very much. Only as a short overview, sustainability strategy of RBI is already since a while, but with three pillars: responsible banker, fair partner, and engaged citizens. And already since 10 years, this is our strategy, but the weight, the importance of these three pillars changed now dramatically, because in the former times, perhaps the wording corporate social responsibility. So it was mainly focusing on what we are doing with our employees, how we are treating them, how we are engaging with the society, with donation programs, etc. But nowadays, and especially now with the Green Deal of the European Commission, with the EU taxonomy, the responsible banking business, so our business, our financing with our clients is really here now into the focus. And why is it into the focus? Because actually here you can trigger the most impact, especially on CO2 reduction, on environmental and social objectives. If you go further, what we tried to or what we did in 1819 and then implemented in 2020 was, okay, how do we best try our journey to be a sustainable and responsible banker. And with this, we got the helping hand on UN principles for responsible banking, coming from the UNEP-FI, a financial program which issued 6 simple principles which are leading you as the banking groups through this transition. And actually, we were then analyzing what does it mean for us in 19 and 20, and we did gap analysis about it. And during this time already, our clients ask us, did you already sign the principles for responsible banking? So this was also a sign for ourselves to say, okay, here, if we are signing, if we are committing to these UNEP-FI principles for responsible banking, then we are on the right transition road. And it's a strong commitment we have to deliver. The beauty of these principles are that they are a uniform framework, and really that helps you to tackle all ESG activities you have to do as a banking group, and independent of the business model you have as a banking group. So I really can only recommend to go into these if you have to drive here the train for a responsible banking group. The other beauty is, of course, that these international principles are totally aligned with the EU regulation, with standards, as we heard before, ICMA standards, and so this is really aligned and goes into the direction. What we saw then, if we analyzed this framework, saw that we have really to look at it holistically. So it's not only enough that business lines are really now engaging in sustainable finance. No, also the risk management must jump into it. Our finance department is taken on board. Strategy, of course, very important pillar to integrate ESGs in our business business path. So with 6 principles, which seems to be quite simple, but here you can really be sure that you are on the safe side to go the right way. One is important pillar is especially the principle 2 with the impact and target setting, because first of all, if you start the journey, you have to know where are you, where is your portfolio, how green is it, how much impact do you have it, where do you have the most important, the most negative and positive impact of your own portfolio with your clients. And then, of course, you have to set targets. Where do you want to be in 25, in 2030? This is only possible together with the clients. So we are really sitting here in the same boat, and it must go hand in hand. our targets with the targets of the clients. And here advisory is very, very important. And of course, all the knowledge must be shared with stakeholders internally, externally. We have to build up ESG knowledge, and then of course also train our people itself, and also then to act in another way. And a new ESG governance for the banking group is needed, of course, because this holistically picture you can only achieve if you are really working hand in hand, and if it's a coordinated approach across all board areas you have in a banking group. And the last one, and then I hand over to Vera, is really that you must be transparent. In the newspaper, you hear a lot of greenwashing and social washing and so on, and it's a lot of reputational risk into it. Therefore, and this is also the driving force now from the EU Commission and all the EU regulation, that you must be transparent on what you are doing. Therefore, this is a very important pillar, what we know. You must be very concrete and very accurate what you are flagging as, for example, EU taxonomy aligned or eligible. But with this transparency, the market can see what you do, investors can see what you do. You can use it as green bonds or as other sustainable products. And therefore, I hand over now to Vera, who will explain you more about the single products we have in place.
Thank you very much, Christine. And from my side, I just wanted to highlight how we embrace sustainability from a business perspective. So it shouldn't be, I think, only triggered by regulatory requirements or by risk and governance, but really to be successful, you need to embed it, you need to make a business case for the banks, but also for the companies when we advise them how you can become greener and more sustainable. Just think about business case. So for us, the business case, although Christine mentioned that we for years we were a sustainable bank and we embraced CSR in our long-term partnership and strategies, still the highlight became in 2018 when we issued our first green bond, where we realized that we attract completely new investors. These were responsible investors, also signatories of responsible investment strategies. And they bought this bond because they have dedicated funds for green transition and to tackle climate change issues. Then we were the largest green bond issuer today in Austria with almost 2 billion euro outstanding. And we also were the largest green bond issuer at that time, and we actually think to keep this pioneer position. Then in 2019, we issued our second green bond, and we started to issue retail bonds. Then we at the same time we decided to have a look. Do we really understand when we because we started to look at the impact of our loans to tackle be eligible for green bond portfolio? We brought this question on a broader basis. Do we really understand who are sustainable customers and sustainable projects? How will the bank, because we're responsible for capital flows, what is our impact, for example, if we decide to finance a coal sector, or if we decide to finance renewable energy sector? And then we realize that we as a bank, we are responsible actually for climate change if we keep on financing coal, for example. And we launched this project to identify sustainable customers and not sustainable customers, and then think about communication strategy, what Christine mentioned. How do we advise and open a dialogue with the customer, which goes beyond now our usual, financial relationship, which is collecting balance sheets and assigning credit risk, and then deciding on financing based on P&L of a customer, but really think a customer and say, are you prepared to tackle climate risk? Do you have already greenhouse gas emission reduction targets? What is your plan to become more sustainable and get rid of fossil fuel? And then we also launched the internal incentive program to promote green and also social lending. Because to answer also some of your questions regarding why if social has the same priority as green, what we realized that green somehow is just the most preferred by the investors, but we as a bank we see the same priority, green and social, and it actually fits to our story because we are a bank with a footprint in CE, including Ukraine, and these emerging markets and developing markets they have a lot of SMEs, and SMEs create jobs, and this means economic growth. So for us, it was quite clearly, and that's what we did when we integrated our and launched our program furthermore than from green bond issuance only in Austria. We brought this know-how to the CE. And I must say that the first reaction were like, in CE, it's not a priority, it's leave it for the Western world. But I was quite happy because I coordinate ESG ambassadors on the corporate side. I was quite happy to change the mindset of the whole group to show them the opportunity why climate change is important, also to open eyes and say, you do create positive impact, but we are not aware. And then continue this already a green and sustainable bond program on a group level. So I can say you for sure that we are the largest also a sustainable bond issuer in CE. And in addition to green eligible categories, we added like financing of SMEs, financing of women in business, promoting of public education and healthcare because of COVID situation. So these are the main categories which we include in our sustainable bond framework. And just to show you then back, in 2020, we set up this cross-national ESG ambassador network to promote the same knowledge about green and sustainable. Then we developed internal ESG rulebook with policies, ESG education program, ESG customer score. We started issuances of green bonds in Slovakia, in Romania, in Czech Republic. Then next year we enhanced with sustainable bonds. And we already can do it on a portfolio level. We have equal knowledge of EU taxonomy, of ICMA green and social bond principles, but we also incorporate supranational like EBRD, IB, MIGA frameworks as well if we have such cooperation. In 2021, we established a group competence center, which I'm leading, and we are growing. The topic is evolving. Then we have trainings. We provided trainings to change the mindset and increase awareness about climate change among the employees. And we designed dedicated policies, so we completely exit coal financing by 2030. So we don't finance any coal companies anymore. We promote financing of renewable energy, which was also a big change for the bank because if you may recall, back in time, renewable companies were not the one who had the best credibility because they were depending on governmental policies and programs. And for the banks, a lot of them were not really credible from credit risk perspective. And then 21, we also were awarded for sustainable leadership by Global Finance, and this award we received for the second year this year as well. And what we do now, we actively engage with our customers, especially large multinationals, to open a dialogue saying, look, by 2030, we need already to reduce our greenhouse gas emissions by almost 50%. It means we have 7 years to go. It means that every year you have to reduce it by 7%. And you are our greenhouse gas emissions finance. You are our portfolio. So what is your plan? Do you have already strategy? We show them best examples. And this kind of dialogue we also support with all ESG relevant topics, with regulatory. Christine help us here to bring awareness, reporting, disclosure. Then we promote ESG innovative products. We have green deposits. We have social KPI financing, which is extremely popular, and green trade finance. Next step is sustainable supply chain that we have to tackle as well. And of course, greenwashing prevention policies and processes with, exact definitions of what is green and what is social, and implementation of the EU taxonomy. And As Christine mentioned, it's all about impact when we speak about principles of responsible banking. And back to you now, Christine, with more information.
Yeah, thank you very much. So this is only a short what I mentioned before on this principle two, where you have to measure your impact of your portfolio according to the most negative and positive side. And we did here a very concrete impact analysis where the results were that in climate and resource efficiency we have the most negative impact. And of course in this we must and across all our subsidiaries, all our group. And this means that now in these sectors, in climate and resource efficiency, we have to set concrete targets where what we have to tackle with CO2 reduction targets, which we have to aim with specific sector policies on material industries, where we have to set ourselves benchmarks and limits um, to at the end really make an impact on climate and resource efficiency. And here we are in the middle of the journey. This is nothing what you do once and then it's finished. It's really an evolving system. We used an UNEP FI tool, so a tool, an impact tool provided by the UN with a lot of information of all our, also on the country needs. That we can be sure that if we fill in our portfolio data, then we get the compliant output and we can trust on it. And for this, we have now to set for climate and resource efficiency concrete targets with the help of the Science-Based Targets Initiative, so other initiatives on international level, which helps us to really goal our financed emission. Yeah, we work constantly on that. If we go further. And here, perhaps because it's also mentioned in the headline, here we are focusing, of course, a lot of the EU taxonomy as one of the defining criteria. What is green? What is a green activity you can finance, and what is not green? And actually, it's of course something what our clients, so corporates, have to do, but also for the financial services sector, this is very, very important and increasingly important, because we as a bank, we are also to report on how our portfolio looks like. And if you see here on the bottom a very basic example how this should look like, you have to screen your portfolio on EU taxonomy compliance, so to say, on the eligibility in the first step. And then you see you have here a piece of cake, which could be generally under the EU taxonomy regulation could be green. And from this piece of cake, you have to really go into detail with with all the screening criteria of the EU taxonomy, and to say at the end if it's really then aligned with the EU taxonomy activities. You see, actually it's a small portion of the whole portfolio. All banks have to report it starting with next year on this green asset ratio, but also the European Central Bank and also investors expect that this proportion is getting bigger and bigger, so that it increases. Therefore, we as a banking group and or all financial services institutions, credit institution, of course, must also have an interest on increasing or on issuing EU taxonomy assets to show then the outside world that our portfolio is increasing also respectively. Therefore, this EU taxonomy is really the cornerstone of all the financial regulation, and we take it here quite seriously to screen and to flag then our assets accordingly.
And how we do that? I can tell you that we have set up a kind of, we call it AVISG program. So the whole process starts from credit life circle, where the projects are coming as usual during the loan application process according to our own credit risk policies and procedures. And then once they pass all the credit risk checks, then we start to sort them into different buckets. What you can see, like there is a bucket for EU taxonomy green, there is a bucket for RBI group green. I can tell you that this is based on ICMA green bond and green loan principles. Then we have RBI group social, and this is based on ICMA social bond principles. Then we have ESG link facilities, and the remaining, once we allocate to all other buckets, if it's not possible to allocate to these buckets, then it's not ESG eligible. But we can review it later because we know that the further EU taxonomies are currently in development. So we can come back and think about if maybe there is a good fit for resources efficiency, for circular economy, and so on. So this is the process of selection of evaluation for ESG eligibility. And then the program starts. So the ESG program has a certain flagging activity. We need these flags to be able to distinguish different loans and also prepare us for green asset ratio reporting, which you can see here. And then based on the quality of every loan, they are allocated to the related ESG eligible portfolios, and they are then selected for RBI ESG program. And this program has a green asset ratio in mind, then green bond portfolio, which we can use for our own green bond issuances further. Then we have social bond portfolio, which we will plan to combine with green and issue as sustainable bond. And then we have also sustainable deposit portfolio, and this is used for funding of ESG linked loans. So it's like bond, but deposit has a shorter maturity, and it allows to for cash rich corporate and asset funds to allocate funds for shorter maturities, like from 1 to up to 12 months. And sustainable deposit, I highly recommend to other banks. It's a very popular product. And then what we do, we monitor and report of all ESG eligible assets with our green dashboard, and we can do it on a monthly basis. And what we do as a next step, because as my colleague from EBRD mentioned, we also used Excel as the first tool to help us to navigate with the EU taxonomy technical standards. And I think we are, so to say, in a lucky position that we don't have that many eligible EU taxonomy projects, because the EU taxonomy per se is a forward-looking classification system. We need more innovation to be compliant, the real economy, the manufacturers. But on the other hand, thinking about future and thinking that we will have in place further 4 taxonomies for water risk, for pollution prevention, for circular economy and biodiversity, we need a digital tool. And for this, we think this EU taxonomy digital tool will help banks, but we also plan to use it for large corporates. So when they apply for a project and they want to quickly check if this project would be EU taxonomy eligible, because for the corporates it would be then EU taxonomy eligible capex that they have to disclose. Then with the help of this tool, you quickly do a simulation and put in some needed parameters based on the sector and project type, and then receive a quick feedback if it's this project is EU taxonomy eligible or not. And it helps actually to report green asset ratio, and it also helps to remove a lot of manual work and exchange of documentation between customer and the bank. And this tool, it's based on the questionnaire, question answer, and it has a decision engine on a transaction on a project level. And why we need it? Because we want to identify as many EU taxonomy assets as possible on a group level. We want to reduce complexity, because if some of you work with the EU taxonomy, you can imagine 500-page regulation. It's really complicated, and then a lot of benchmarks you need to research manually. We want to be prepared for future extensions of the EU taxonomy because we expect now social taxonomy and other taxonomies. And we want to have a user-friendly process to collect data on a transactional level. And we're planning to do it in 2 phases. So we already start the first phase of testing with our ESG experts in head office and Network Bank, and we actually welcome everyone who wants to test the tool and give us the feedback. And in a phase 2, we already have a pipeline of customers who want to test it, relationship managers, product managers. So we're planning to start to use this tool as soon as possible, but it's still work in progress from our side. And as a bottom line, I just wanted to say that we actually at the end of our presentation, so feel free to contact me and Christine if you have further questions. And we're looking forward, and we think that for us, green banking and green finance, it's a new way to collaborate with customers and other banks. It's also a new way to engage and lobby our climate transition targets together on a governmental level, and also to enhance our stakeholder relationship. Many thanks.
Thank you very much, Christine and Vera, for this very elaborate presentation, detailed steps. And I hope in case somebody from our audience would love to have any questions, they can write to you directly and talk to you directly. We have some questions to you, but maybe I will ask the first question as a moderator. I know that Raiffeisen Bank has issued green bonds in Croatia for the amount of 200 million euro, and also in Romania, 100 million euro. My question would be about Ukraine. Did you have any special requests or any ongoing dialogues with Ukraine, with Raiffeisen Bank Ukraine, as regards the topic of green bonds, or maybe any dialogues with corporate sector in Ukraine?
Oksana, that's a very good question. First of all, I'm also coming from Ukraine, and you can imagine if I drive transition in Croatia, in actually Bosnia, in Hungary, in Serbia, and so on, many banks, we actually plan to have ESG bonds in every network bank as a part of MREL issuance. That's our target. Of course, Ukraine was one of my first countries where I want to bring my knowledge and to promote. And that's true that I also support a lot of my colleagues from Raiffeisen Bank Ukraine to first of all identify these green assets. But as you know, in Ukraine, it's still hard. We're still not there with our real estate sector, with energy. We're still very much dependent on fossil fuel. The technologies are not efficient. So I see a lot of potential for transition. And unfortunately, due to the war and the current situations, a lot of initiatives were just postponed or reprioritized. So we are all very much looking forward once the whole situation is over and we have a peace in our country back. And I already also on some global ESG summits and panels asked this question, if there is a global plan to help our countries. And definitely, I think sustainable recovery or sustainable rebuild, it's one of the plans that it comes from a lot of stakeholders on a high level, but also from our company. I mean, I would even support our government to say that if they want to raise funding from external stakeholders, it should be a kind of SDG bond, so Sustainable Development Goals linked bond or green bond. So this would be one of, as an expert, recommendation.
Thank you very much, Vera. This is a very positive answer. Definitely, I would love to see much, much more. Also, I'm the member of the supervisory board of a green bank in Ukraine, Ukhrgazbank. And so we do see that there is still to be done, much to be done, and we are all hoping that one day this door will open. We also have a question from Igor. He's very active today. Igor Olaho is, as always, very active. And the question is the following. Has there been specific cases of RBI calling the loans when the clients fail to adhere to the principles of responsible banking, or when the clients were engaged in greenwashing?
It's a very good question. If I may answer, Yes, I mean, we have a rule that's one of our greenwashing prevention policies. If a customer fails to deliver data, or if we find out confirming that it's a green loan, for example, a green certificate, BREEAM or LEED for green real estate, where you need an evidence. So for renewable energy projects, for example, it's not necessary if we know it's a solar panel. But for green buildings, it happened to me as I'm responsible for green bonds, for green loans. If a customer doesn't deliver a certificate in time or postponed or whatsoever, or does not achieve a certain level of certification like LEED Gold and not lower than that, then we would unflag this loan as green. And we also integrated artificial intelligence solution to monitor all our customers on a daily basis as screening the news on the web, because we did have some customers in the past who were engaged in some spillovers, oil spillovers or environmental scandals. And to such customers, we shouldn't offer any green or social lending until they correct, so to say, the misconduct. Yeah, and this is also one of the lines of prevention of greenwashing.
And with this, you see that it's really the greenwashing and this be transparent on what you are financing, with whom you are doing business. This is becoming more and more important. And if you read it in the newspapers, of course, there are also the first litigation cases now into play, where also banks are then French banks, which are, for example, very very advanced in ESG, and I'm sure they have proper processes in. But because this is of course a new topic and a new process, you have to build up all, and of course you have to really focus now to be here transparent. But it's an evolving process, of course.
Thank you very much, ladies. And maybe Igor, I will also give you a kind of a hint. Recently, I have given an interview in terms of this topic, and you can find, if you go to the Chapter Zero webpage, you'll be able to find answers to some of your questions there. Or in case you have any questions, just let me know. I will be able to forward the interview to you. Thank you very much, ladies. And we also have one more question from Igor, but it's more.
But this question, Oksana, if I read about the sponsor of terrorism, that's exactly what I sent yesterday evening to Christine, because I saw it on the website, and I said, how do we proceed if there is such situation? And I think, Christine, if you would like to answer, I think that's exactly what we discussed.
Of course. Unfortunately, as many companies before the war, of course, there were also connection to countries, to Russia, etc. And now you have to deal with it and to solve. And of course, this is if you are speaking on responsible banking, you have really to make your thoughts. Okay, how you're dealing with it. And our board is evaluating how to go here into the into the direction and to find solutions. For the time being, we cannot, Vera and myself, we cannot say here more on that, but it's really something which is also for us very very important to follow up here. And only for your knowledge, Russia, it's not a branch where we have direct control on it. It's really a separate entity, and with all the sanctions, all the things, it's really a separate one. Therefore, Vera and myself and other colleagues in the bank, of course, we are trying to really go into the sustainable transition and to support our clients in all the countries in CEE. But of course, this is a spot where which must be solved, which our board is still working on it.
Thank you very much, ladies. I do admit it's a very sensitive and sensible question to all of us Ukrainians, but also to my colleagues throughout Raiffeisen Bank International Group. And definitely we have to expect the explanations or any kind of communication from the management board of the bank. Thank you again, both Christine and Vera, for your incredible input into today's webinar. Please stay with us. I hope we'll have some timing at the end of the webinar. Maybe there will be some more questions to you. And one more question is coming from Sophia Al-Tafi, but here I will be able to answer. Sophia, when you enter the page of Raiffeisen Bank International, you will see in which countries the bank is present, and maybe you'll be able to find the information that you actually need. Good. And with this, we are moving forward, and let me present to you Maka Pochorishvili. Maka is coordinator of ESG at TBC Bank. As you know, TBC is the largest Georgian bank. So Maka has more than 15 years experience in banking sector, and more than 10 years she worked in risk management, leading teams on capital and liquidity management, on regulatory response, reporting, and governance and information security. So Maka, floor is yours.
Thank you very much. I'm happy to be here today. It's a very interesting webinar for me as well, listening to the participants, and I hope that this presentation about TBC Bank's journey, because it was mentioned that it's a journey implementing ESG and responsible investing, will be as well useful and interesting for participants. I will start to share the presentation, and please let me know that you see it.
Colleagues, Maka, and my sound from your side is a bit poor. Maybe you can make it a bit louder on your side.
Okay, wait. I'll try.
Thank you.
I think everything is loud here. I can make my voice louder if it is okay.
Absolutely.
It's okay?
It works,
then
works
I will be a bit. Let's be loud about ESG.
Thank you.
So let's start. I will start with our presentations about climate change consideration investment decisions in Georgia, what we do and where we are. My presentation is about the current state, what challenges we have and so on. I'm asking our participants to ask questions, even if some questions are inconvenient, because I'm ready to answer them, because this process is not an easy way. And understanding is very important. So in the beginning, I'll tell a bit about TBC Bank. TBC Bank is already 30 years old or young. So we have this year 30 years anniversary. So it's almost young as the Georgian state, so since independence. However, during these 30 years, we grew. And currently, we're serving more than 12 million users. We're a leading financial institution in Georgia with a full range of financial and non-financial services. We have a largest digital ecosystem in Georgia. This is TNET. This is very important with regard of digitalization of services, accessibility and affordability of financial services, which is very important. Here, several times we mentioned the connection between green financing and social financing, and for me they are interconnected, because social financing are needed for groups which are mostly vulnerable towards climate change as well, and opposite as well. So therefore these are not two separate topics for me. So therefore the digitalization allows to cover more population and more businesses and increase their profitability. We expand in Uzbekistan. We have a leading payment fintech in Uzbekistan as well, digital banking there. And of course, governing this everything with strong corporate culture. A bit more about on Georgia. Our gross loans equal to 70 billion lari. It's a lot, and we understand our impact and our influence on Georgian economy and society. We take around 38% of retail banking. We employ around 9,000 employees. We have more than 23,000 active mentioned terminals. We are a leading partner for corporate banking for MSMEs. So here we have a small figure that 70% of newly registered legal entities choose TBC Bank as their partner. And of course, this is very important. How our journey in ESG starts or continues. Of course, we build on something what was already there. The environmental and social risk assessment of lending, which is implemented in most of the banks in Georgia in accordance with, for example, EBRD performance standards that were already there. However, we saw that we need to develop further, and we decided to have an ESG strategy. Why it's important to have a strategy? So this is a strategy document in which we identified different directions and gaps which we had, and decided to follow in line with international standards. This ESG strategy was approved by the board of directors at the end of 2021. This is very important because when we want to implement something, integrate in the daily operations, and think about medium long-term goals, it's very important that it comes from board and executive management. The ESG strategy contains more than 50 different initiatives. I can count them all here, around 10, 15 targets. However, the main directions what we choose and we had, first of all, are listed here. Strong ESG governance structure. I will talk about this on the next slide, why it's important to understand, because without ESG governance structure, then the path and the whole picture is maybe a little bit lost. Then focus on sustainable financing, services, and products. What do we mean under this? Usually, we call everything green financing. However, for customers and for businesses, it is not so clear. They need to have more tailored product where they understand what benefits their business have, because everything can be green for them, but to make the green financing more marketable, more consumable, it needs to be tailored. It needs to be a product and easily understandable for bank staff, I mean sales staff as well, and for businesses. Climate-related risks and opportunities. This is direction which is maybe the most challenging, not only for us in Georgia, but I think worldwide as well, because it has its complexity. I will talk about this a little bit later. We include, of course, employee diversity, equality, and inclusion. This is a part of ESG. So our ESG is a broader sense. It's not only environmental sustainability or climate change, but covering social and governance parts as well. Green and sustainable funding. Focusing on green and sustainable funding is as well very important, because the incentives and benefits can be transferred to the customers. Not only the incentives and benefits, green and sustainable funding is as well accompanied with technical assistance, with capacity building, with knowledge sharing, as this is very important in order to have climate considerations in investment decision. And a system for impact measurement and reporting. This is very important because measuring the impact is the precondition of achieving the target. Transparency is related to reporting. For example, since 2019, we are publishing the sustainability report in reference with the GRI standard. And this is not only transparent reporting, but this is a commitment that the company is doing this reporting every year, and then you are improving your reporting from year to year. So one of our targets, for example, is to have sustainable portfolio at the end of 2022 at 700 million lari, and at in 2023 at 1 billion lari. We took targets which are easily understandable as well. So I will make a small comparison. When we talk about reduction of GHG emissions, so this language is often not understandable for businesses. It is as well very difficult to be marketable, to put in the product. However, we know that if we grow the sustainable portfolio, which consists mostly of the renewable energy financing, for example, energy efficiency, and so on, then it's already a positive impact on everything. We will calculate it in a back office, so to say. However, for colleagues who are working to grow the portfolio, for businesses who are trying to green, for them it's easier to understand, and as a target, it's easier as well to follow up. A little bit about ESG governance. It's one topic I took to tell more about this because it is very important. Without the proper ESG governance, it will be very slow process, and very challenging. I don't mean that we need a lot of committees. However, it's maybe the better way to have one dedicated framework for decision making in which the whole management is present, business part, risk part, CEO, the heads of different functions like, for example, compliance, CSR, and so on, legal, procurement, and they see really how the strategy progresses. So in 2021, first we established ESG committee at the executive level, so TBC Bank level. Within this committee, we developed the strategy, and in 2022, our board already saw that it would be very useful to have ESG and ethics committee at the board level, which is meeting on a quarterly basis. On quarterly basis, we are making decisions around ESG culture, climate risks, and opportunities. What I mean in ESG culture, so we need that the whole TBC is in this process involved. Of course, with regards of their functions. I mean, if someone is working with customers, they need to know more about green financing. When someone is working, for example, in HR, they need to know more about diversity, inclusion, inequality, and so on. So we are in process of integrating and enhancing it in ESG culture. Climate risks and opportunities. This means that the committee oversees, for example, TCFD implementation. I'll talk a bit more about this later. The task force on climate-related financial disclosures. This is one framework which is very important for TBC Bank, as we are UK premium listed company on London Stock Exchange, and this gives our big responsibility to be in line with international standards as well, although they are not obligatory in Georgia, for example. Sustainability reporting and transparency, training and capacity building. Training and capacity building means not only training capacity building for TBC Bank employees, but also for board members and management members, because climate change, climate risk, and ESG, these are topics in which it is very important, as different regulators say, that the capacity building is continuously, even showing some competencies for the executive management members. Here's a small scheme, how is our governance organized. At the board level, we have 3 committees. Board has the overall oversight, of course, and then we have ESG and ethics committee dedicated to the topic, and some topics might go to risk committee. At the bank level, we have the mirror board structure, so therefore it's the same. And at the management board level, we have 2 committees, ESG committee and environmental committee. The environmental committee is more dealing with our direct impact, so direct operations, environmental management system, and ESG committee is dealing with ESG strategy and with broader targets. Organizationally, we have 2 different groups. One is the ESG department, in which we have different competencies, and the environmental social risk management team. This team is more dealing with the lending part, with the lending component, and they are involved on a daily basis in the lending and assessment of environmental risk. potential risks of lending. So after all, where we are now, currently we have around 700 million lari volume of sustainable portfolio.
I'm sorry to interrupt you, Marka. Just
Yes.
very deeply sorry. How much would this be in euro, in dollars, just for our audience to get understanding?
It's around $210 million. Around.
Thank you very much.
Yeah, I think so. It's 2.7 dollars like. Around 80% of this portfolio is in renewable energy. So TBC is a leading partner in local renewable energy financing. Why it's important? So how we approached it years ago. So it's very important to find as well business opportunities, because only talking about risks, it is not enough. We have to identify as well business opportunities, because we need to build expertise in it. Years ago, TBC decided to take this opportunity and to develop this expertise in renewable energy financing, and this portfolio grew based on this. Of course, we have several syndications. We have partnerships with international financial institutions, even with EBRD, for example. We have capacity building for them. We have consultancy, technical assistance, and so on. Why I'm mentioning this, a financial institution can't tackle everything at once. It's very important to build the expertise step by step, and as well to identify the opportunities in the market. Green lending procedure, this is something new what we have. It was as well developed with the support of our partner IFI, and recently we introduced it. Why it's very important? Until we could have the green lending procedure, green lending or green loans were identified based on IFI criteria. So we did not have our own capacity or our own methodology and tools to understand if an investment is green. So what does it mean? This means that the capacity to grow the portfolio is low, because you need to involve other parties, third parties, consultants, to understand and to prove that this is really green. So now we have a standard procedure. I don't say that we can assess all the types of green lending. However, the standard measures, they can be assessed, and this is as well based on international standards. We have, for example, as well some business opportunities in agricultural technologies. I have one example later to talk about this more. Green funding in volume of $200 million. This is very important. So this is funding we are dedicating to green funding especially. This is attracted from different partner IFIs, and this why it's important. It's very important because it is related, connected with different technical assistance. There are some cashback options, which is very favorable by customers, and it incentivizes the growth of the portfolio. And at the end, I would like to mention the Global Climate Fund accreditation. This gives them much more opportunities. This was a long way, almost 2 or 3 years. We went through this process. However, now we will be able to have more affordable funding and transmit them to the customers. We are currently in process of developing a program, because as you might know, in order to participate in the programs of Global Climate Fund, the financial institution has to apply for a program and has to receive the confirmation. I brought another example. What we found in Georgia, that it's very trendy and popular. This is renewable energy in hospitality industry. In Georgia, the hospitality industry is growing economic activity, and a lot of hotels, for example, are in rural areas, not in Tbilisi, with beautiful nature and resorts and so on. Therefore, this concept somehow corresponds to the renewable energy generation, and some hotels are installing solar panels in order to increase their energy independence, because this is well important. Secondly, they see there here some marketing bonus. I mean, these products are more popular than these places are more popular among guests, because they as well somehow send the message to be healthy environment, and this renewable energy generation adds to this um, reputation as well. This is one example. This is Koreli Palace. It's in eastern Georgia. TBC Bank financed the renovation, energy efficiency building, and as well the renewable energy station. Another example is as well one of the most popular places in Georgia. This is Lopotam Spa Resort, and it's financed with TBC leasing. So leasing is as well one product which in this direction could be as well interesting for customers. Here we have as well small assessment that the 460 kilowatt solar power plant will be financed for 7 years, after which Lokota Lake Spa Resort will enjoy virtually free electricity during 20 years. So this is really cost cutting, and as well, I mean, from business perspective. However, it's as well very good instrument to prepare for climate change and climate risk. This is what about we do like with the intention to do green business. Of course, at the same time, the regulatory framework develops as well, and this regulatory framework contributes to our effort. First of all, I would like to mention the ESG regulatory framework in Georgia. The National Bank of Georgia started working on the development of a sustainable finance framework in 2017. National Bank of Georgia is as well a member of NGFS. This is Network for Greening in Financial Sector. This is the most of the central banks and regulators are members of this network. In 2018, the National Bank of Georgia integrated the ESG topics in the corporate governance code, but with a rather general meaning that the banks should take care about the ESG risks. And in 2020, they added the ESG disclosure requirements to Pillar 3 annual reporting, so to increase the transparency. Okay, we were already prepared there because since 2019 we were publishing our GRI report. However, this was very important for banking sector. And starting from 2023, we will have a green and social taxonomy in Georgia. It is already published, and we are in process of implementing the green taxonomy. The green taxonomy, because we had here as well a question how far Georgia is from European Union taxonomy. While developing the green and social taxonomy, the NBG considered different international standards, and of course the local context as well, because our technological know-how is not so developed like in European Union, and some criteria should be local criteria should be considered as well. Very important topic here. According to this law, we can call something green, I mean a loan green, only in case if this loan is eligible according to the National Bank taxonomy. So all other criteria, I mean criteria which are maybe less strict, so then we can't call these loans anymore green, social, or sustainable. This is I would say this brings us to the topic that we are in the process as well somehow to harmonizing NBG eligibility criteria and criteria we have from IFIs. This is the process we have, for example, now. And from 2023, we will be obliged to report on green taxonomy in our Pillar 3 disclosure. What does it mean for us? So for us, first of all, it means that we have defined criteria from national bank which we can use in order to grow our portfolio. Because greenwashing is a big challenge, because you might run really risk if you call something green and you are not sure that it's green, or this is not confirmed by third parties. Because this competent third-party confirmation is a very important component of avoiding the mistake. On the second hand, this is a preparatory work for example, climate stress testing. We know that next year our National Bank of Georgia will issue a document about climate stress testing, as it is done by European Central Bank, for example, or Bank of England. And we would like to see what will be the results for us.
Marka, and may I interfere again
Of
with
course,
you here?
of course, please,
Because we are
please.
running out of timing, and I want to listen to you. We all want to listen to your presentation till the end, but there is one question towards this slide, which comes from Maria Luisa, who asks you about, do you believe that the Georgian government is pushing companies enough towards energy transition?
When you look to the ESG, to the climate strategy of Georgia, this is Climate Strategy 2030, there are some instruments and some initiatives planned, but this is more rather on the side to incentivize something. There are some measures, two very important measures, for example, which are defined by law. However, the challenge is that these laws are not enforced. I will mention, for example, energy efficiency law, which should be enforced already this year, starting from 1st July. However, the developers, constructors, and different companies as well state we are not prepared to it, because you need a lot of expertise and knowledge. However, we know that next year, 2023, in July, it will be enforced. This means that all developers should build energy efficient buildings. This is very important law. Another law, what they are trying to do, this is restricting import of old cars. This is very important, restricting of cars. And we have a lot of old cars in Georgia, in Tbilisi, and they are restricting cars which are more than 10 years old. This is already very good. What they did as well was they implemented the technical inspection of the cars. This reform is not so successful, we know, and they are admitting it as well, because a lot of cars, they get fines, a lot of the drivers or owners of the cars, but they don't pass this technical inspection as well. What is very important, currently the government is working with a Global Climate Fund to accelerate the business of electric cars and hybrid cars, to develop programs in which TBC will as well participate, and this is very important in it. So I would not say that they do enough, but they do. They have some initiatives. However, in order to accelerate and support this process, I think there is much more needed.
Thank you very much, Marka. And I kindly ask you, if it's possible,
I was
almost running out of time.
Okay.
Could you please, finalize and give us the most important, what you wanted to tell us, because you provided so much already to us in terms of Georgia, and we know already what our closest neighbors are doing. So
I will go to the last slide, really, about solutions and trends, and I summarize what is very important. So, very important in order to have really acceleration in greening our economies is to work on the both sides, on the customer, society, and on the internal banks side. So awareness raising, training, and courses is most important. So this is what we understood, and we are starting from next year, 2-year program for our customers and staff to have trainings in, we call it green mindset, because you need to have a green mindset and green solutions, and to understand these green solutions. then it's very important as well to see that as a financial institution, you are not alone on this journey. We have a lot of partners, especially international financial institutions, who support us, and we have every financial institution or someone who is listening to us and thinking to develop in this direction more, they have to ask their partners, because they have to offer a lot, starting from the capacity building, implementing international standards, and so on. There's a lot of to take from them as well. What is very important as well to advocate publicly for green initiatives, to start maybe with small targets and then to grow, not to wait until we know everything, because it's very difficult to know everything about climate change, risks and opportunities, but it's very important to start. And at the end, I would as well say that memberships in different international initiatives is a very good help as well. We saw as well on example of, for example, Raiffeisen, there are different initiatives as well, like science-based targets, climate pledge, Paris Agreement alignment, a lot of very good references in order to understand where our business or your business stands. So this is my conclusive word. I hope it was interesting, and if there are some questions, I would like as well to answer them in written, because we don't have so much time.
Thank you very much. That was very reassuring and very a lot of information, and a bit for me it's a bit sad, because I see that Georgia is ahead of Ukraine in terms of sustainability and ESG, and does a lot also on the level of government. So you have nice cases already. Who will you will be able to share with Georgia? In terms of your advancements, there are two more questions to you in the chat box. Could you please answer this? Maria Luisa asked, and there was one more question in terms of risk management from Andrei Kaminsky. But in the meanwhile, as we are really running out of time, I would ask our speakers one and only question. What do you think Ukraine should do after the war finishes? Or let me paraphrase, what we have to start now in order that when the war is over, we launch immediately in terms of ESG, taxonomy, greenwashing, your ideas, please. So, who can be the first?
I actually, if the question was to speakers, let me just.
Yes, to speakers, yes, to our presenters, absolutely.
I would start to rebuild in the infrastructure. I think the war clearly showed our vulnerabilities. First of all, what I can see, for example, in Austria, all the cables from the network are hidden beneath the land, so beneath the soil. And I think this is something that we should do as well in Ukraine, because then the cables, and this is what one of our recommendations, by the way, one of our customers, he noticed this as well. Then when the cables are not outside but hidden, then the system is more resilient to new attacks, and it's also more stable, so to say, to the heat. You know, when there is too much snow, then the cables are not cut and so on. So modernizing the network of energy grid. Then transitioning to renewable sources. I think we really, all of us, not only in Ukraine but also in Europe, need to get rid of fossil fuel. First of all, the requirement is on EU level to be carbon neutral by 2050. That's the vision of European Commission. And for this, we need to switch to renewable energy. And Ukraine is a perfect case because we have solar panels, solar parks, we have wind parks in different regions on the south and west and east. And we also can produce energy from biomass and, you know, from wood chips. And this is also a sustainable one. So that's what I also already recommend to some of our Ukrainian big companies to think about in the EU taxonomy world. Then switching, I think there are a lot of data proving sustainable agriculture practices, and Ukraine has a huge potential as we are agri country to have a certification scheme to establish smart farming with with drones and some data gathering how to improve the harvest of vegetables and fruits and grain. Then on water efficiency and especially on waste management, I think here I also did the research. We don't have currently practices of recycling, and the waste is growing and growing and growing. And I think here we can also start to rebuild a recovery with sustainable infrastructure for waste management and for more recycling and reuse of materials, because it's also in line with resource efficiency. And the target is if it cannot be reused, repaired, recycled, it shouldn't be produced really, because the resources are anyway limited on the earth. Then moving away from plastic use and replacing it with more reusable or plastic which can be dissolved and not staying on land and as a waste for years. And also a green so because some buildings were destroyed, so if the new buildings should be built, they should be energy efficient. And EU taxonomy covers 40% of greenhouse gas emissions in European Union comes from the real estate sector. So EU sets already quite clear targets on reducing greenhouse gas emissions, and I think Ukraine can set up here a good example. When we rebuild something, it should be EU taxonomy eligible, meaning with extremely low energy consumption or like passive house. I have the right legislation for this, and even promoting with some taxation scheme companies who are transitioning to more green technologies to encourage this. And in addition, of course, to cover clean transport, and so the new buses and the new cars should be more in electric vehicle mode, because also we saw with the increased price for gasoline, it's not sustainable to keep transport with an old way. Thank you. This would be it from my side.
Thank you, Vera. This was a very consistent and very detailed answer, because definitely you are more privileged because you are Ukrainian and you know the realities of the country. From maybe Friso or Christine or Malka, do you have any comments to my question, or do you have any proposals? You're highly welcome.
Maybe very briefly, I mean, focusing on the journey I was talking about earlier, when it concerns tapping and being able to access green capital markets. In EBRD, as I mentioned, the first strategic initiative that we had was 2006, and it took until 2010 for us to issue our first green bond. Now, because of the knowledge and experience that we have, that timeline can surely be shortened, but it does mean thinking about your operations now, thinking about what you need to do, as colleagues have also showed us today, what you need to have in place to get to that stage. And a sustainable finance framework is just the end of that journey, right? That's just a 10-page document basically summarizing and setting out how you're going to manage this process going forward. But again, it's also not for everyone, as I also pointed out. It's not for everyone to be able to need also that financing at scale. I mean, most of the economy will be SMEs. It's unlikely that they will need or be able to tap into capital markets more generally. So we have to be wary of that as well. Just also very briefly on Igor's earlier question, I think you reserved that for me until the very end as well. I mean, it's undeniable that EBRD's portfolio in Ukraine and to a certain extent its neighboring countries is affected this year. And that's the link I've also showed or shared in the chat. We stand ready and we continue to be ready to support Ukraine. And very important too, because we have sound banking principles, of course, but that we're able to work with partners. GCF was mentioned earlier as well, the EU, to structure instruments whereby we can continue to do so. In this particular example, I mentioned funding by the US specifically. It's part of a much broader package for Ukraine to help them reconstruct. Thank you.
Thank you very much, Friso. Any comments from Malka? or from Christine?
I could only say that I am from risk perspective. You saw that I'm working since, I don't know, 250 million risk. However, in order to bring these topics and to strengthen them, we need somehow to learn how to speak the business language. It's very important to put these things in some products and business language and to give them understanding that this is not an ethical topic. This is already the essential business topic, and they have to understand that this is a part of their business model, not being ethical. This is not the, and we have to somehow show that this should be like, I don't know, accounting. Like accounting is a part of every business, it should be there as well.
I guess I know what you wanted to say. You wanted to say that it should be already in DNA of the company.
Yes, everyone says this DNA. So I did not want to repeat the same, but it's even not in DNA. It's a normal process. Like maybe already, like I don't know, accounting is very boring process. In 10 years, the climate risk and ESG should be as well becoming boring because it should be everywhere.
Thank you very much. Thank you. If there are no more comments from the side of our speakers, I would love to put the last question on the screen, and I kindly ask you to answer this question. So, колеги, чи можна вивести ще одне питання на екран? So, into which industries will green transformation should bring opportunities in Ukraine? Your opinion, please. Do we have already the answers? Very good. Infrastructure, energy, agribusiness. We have here Alex Lisica. You see, Alex, 79% is for agro. Waste management, including agro waste, and transportation, 50%. Thank you very much. Dear guests, dear speakers, dear organizers of this event, it was extremely useful and your presentations were extremely powerful, and I think that they provided us with a good food for reflection and a good booster for further actions. So let's plant today's seed and hope they will grow as soon as possible. Yelena dropped us a message in the chat where she requests us to fill out the form, the feedback form. So in case you have 5 minutes of your time, precious time, please give us your feedback, which is very useful for us. Again, thank you very much for participation and wishing you safe with electricity and quick victory. And let's celebrate as soon as possible. Thank you all very much.
Thank you very much.
Bye.
Thank you. Bye-bye.
Thank you. Bye.
Bye-bye.
Bye.